They're another group that had a very exciting 2013 and have had a rather unloved 2014. So there's not as many senior loan funds as municipal bonds, but there's almost 30 available to investors. A new one just came out this quarter. But when you look at them, they're right now, they're trading at about 9 discounts on average to net asset value, which is considerably wide. They're yielding about 7.4%, which for loans that will generally rise with rising interest rates, which a lot of people think rates will rise at some point in the future, is a very favorable position to be in. Then you look at the guts. The guts have been doing real well. The guts are up about 6.5% on a one-year basis, but the market price is only one and change. So it's definitely, you can tell, discounts widen. Again, the closed-end fund story, when things are disliked and they're well managed and they have a reason to be in long term, it's when you go in and you invest. And so if you think about that, remember these aren't index exposures to loans, which is one way people can invest in them. These are portfolio managers whose job is to do their own credit work. So at the end of the day, one reason why I think that closed-end funds do so well with the bond side, with active management, is credits are a lot harder to understand than equities, because their company might have 7 loans and 43 bonds, just as a random example, and to be able to dig into what it's worth, if there is a default. And I'll tell you, with senior loans, if there's a default, the recovery rate is over 70% from talking to managers in the sector. So yes, there can be problems, but these things are higher up the capital structure, and they have a provision that allows the loans to reset with rising rates. There's a lot of good analysis you can do for closed-end funds, but there's really 3 answers we always want. Is it relatively cheap or expensive? They're relatively cheap. Dividend coverage, looking very favorable for most loan funds, so not a lot of dividend risk in the current environment. And net asset value performance. As I said, it hasn't been a home run, but it's been slugging away at the right level, and the net asset value is a future anchor point for market prices. So I think those 3 things, if you keep them in mind, you'll be in good position.
For more information and data on closed-end funds, visit our sponsor, CEFconnect.com, the authority on closed-end funds. This is Closed-End Fund News. Thanks for watching.